Yo, I'm Brendan. Exactly how much money does a $31,000 dividend portfolio pay us each month? Today, I'm revealing my dividend investing portfolio in Robinhood to show you how much I invested last month, how big my dividends were, and then just for curiosity's sake, we'll do some calculations to figure out how long I would have to invest like I currently am to be financially free just from dividends. Here's what my dividend portfolio looks like as of right now, as of today. It's done pretty well lately. I mean, as far as capital appreciation goes, but also as dividends go. Quick update, year to date, I'm up 3.2%, not counting dividends. In the last 3 months, I'm up 5.33%, not too shabby for a dividend portfolio. The last 1 month, we're down a little bit. Let's not talk about that. The last week, we're up 0.4%, and even in the last day, I'm up 0.41%. So I'm pretty happy so far. And last month in April, there weren't a whole lot of changes. I mostly got out of positions I didn't like and got into one that I did like a little bit more. I sold all my AT&T, I sold all my Tronox, and I sold all my MPW, my Medical Properties Trust. I'm not the biggest fan of investing in individual stocks anyway, plus these weren't really rubbing me the right way, so I got out of there, and I got into JEPQ instead. So there was no net difference in my overall invested amount, like my own money that went into the account. No change. Sold some stuff, bought some stuff for the same exact money, and that was it. And if you're not familiar with JEPQ, it's the JP Morgan Nasdaq Equity Premium Income ETF shares. The name just rolls right off the tongue. This is a bit of a weird one for me because they actually are investing using derivative income, and I don't typically invest in things that do that. So this is kind of a lark for me. I don't typically do stuff like this, but for just this money in just this instance, I'm going to try it out. All right, back to the spreadsheet. Let's talk about how much money I got in dividends last month, and then also what that equates to in terms of my annual return and my return overall since I started dividend investing a year and a few months ago. Compared to last month, where I got $148 in dividends, April was a little shy. Our usual heavy hitters showed up, JEPI and SPHD, and they gave us some big lumps of dividends. And otherwise, our individual stock positions are so small that our dividends are correspondingly small too. So that gives us a total in April of just $91.47. I mean, I still like getting $91 for sitting around doing nothing all day. But what that means for us is for this period, we got a return of 0.31%. And if we got that same amount basically throughout the whole year, that would only be a 3.7% return. And that's not great. So that means that April's impact on our overall return from the lifespan of this dividend investing portfolio, it brought it down. Now we're down to 7.04% if we average out my yearly rates by month. And so for dividends, that's still a pretty darn good return, but compared to like last November, when my average of yearly rates by month was 8.08%, it's gone down quite a bit since then. You can see here my returns calculated by month have just been pretty steadily going down on average overall. That's what this little light blue trend line is. And when last April was such a freak month that was so high, we're kind of set to do that. But still, compared to any other month in here, April has been the worst performing month we've had, period. I still think dividend investing is fun and is worth doing for me for at least this chunk of my portfolio. But now my question was, what if this was my portfolio? What if this was everything and I was relying on this for financial freedom? How long would it take me to retire based on just this dividend investing portfolio? And how awkward that I've never asked this question before. Let's find out. As much as I'm a sucker for a spreadsheet, I'm also a sucker for a decent online calculator. And I found this dividend calculator on Forbes' website. It's really, really sweet because what you can do is factor in more than I typically do on my own spreadsheets. They have you input a stock price and a number of shares, which I don't think is that important because what we're really after here is the investment amount. So all I did to get started was create a stock price and a number of shares that ended up equaling the actual amount of money that I have invested right now. And because I already know my average annual dividend yield of 7.04%, I can plug that in here. So then you can just play with the factors and say, how long do I want to hold on to this? Here's your holding period. How much money do I want to contribute to the account every year? Then you can get even nerdier and figure out your dividend tax rate, which is really handy. And then these last two figures are things that I never programmed into any of my calculations. I just assumed that everything was constant, nothing is growing or changing or moving. We're just doing the same thing for the rest of all time. This calculator is built with growth in mind. So you can build in an expected rise in dividend payout and also an expected rise in the stock price. And you can toggle on your drip plan, yes or no. But if the companies that we're investing in, or if the funds that we're investing in seek out companies that do strive to raise their dividend over time, and they might have some capital appreciation, then this is a pretty critical factor to put into your calculations. So my first question was, how long do I have to wait to make $1,000 a month? Unequivocally, reaching that 4-figure mark hits real money territory. And so I was curious, if I didn't invest any more money, just like I did this last month, would it be 5 years, 20 years? How long would I have to wait? Well, thanks to this handy dandy calculator, it says I need to wait 13 more years to hit $1,000 a month in dividend income. And that's just with their standard factored in 3% rise in dividend payout and 3% rise in stock price payout. And those are the same figures we're going to do for the rest of these calculations because I wanted to know 4 more income levels too. So let's do those now. If you're like me, you see 13 years and you're like, that's kind of a long time to wait. I mean, $1,000 a month you can go out and earn at a part-time job. And so is it really worth it to wait? The dividends are growing fairly well, but is it well enough? Well, let's just hold on because these next 3 income levels come in a lot quicker than I thought they would. And so it's typical compound interest, right? It just takes forever to get that ball rolling. And once it does, wow, it's really rolling. So it was 13 years to get to $1,000 a month of income. It's only 3 years more to get to $1,500 a month in income. So 16 years of waiting and you get all the way up to $1,500 a month, which is essentially like our mortgage payment. I mean, something like that can pay for your house or pay for a trip or have a really massive car payment. If you want to have some burritos and race cars, buddy, wow. That would be a lot. Just for fun, let's figure out how much car you could buy with $1,500 a month. So let's say it's a 5-year loan, 5.5%. We're in Arizona. We've got some sales tax and some other fees associated with it. Calculate. Hey, that's not bad. A $78,000 car loan. And that's right now based on these pretty high interest rates. I mean, if that interest rate dropped back down to something closer to what it was before, like 3.5%, then now we're talking about an $82,000 car. You can get a lot of car for 82 grand. Case in point, a first generation used Porsche Cayman GT4. Incredible to look at, incredible to drive, probably will depreciate very little in the near future. That's what I'd be buying. As nice as $1,500 a month is, it's not real money. This isn't like income replacement money. I'm financially free money. It's just fun money. It'll cover some bills or it'll buy you a nice car. What about real money? What about $5,000 a month? 60 grand per year, doing nothing at all, just earning money from your dividends. How long do we have to wait for that? This is where compound interest really starts to kick in and gets really impressive because we waited 16 years to get to $1,500 a month. Then we just wait 7 more years to get to 5 grand a month. So we've waited basically 40% longer in terms of time, but we've more than tripled our money in the meantime. 23 months until you've got 5 grand a month in dividends. That's pretty impressive. Okay, that's survival money. That's like everything is paid for, we can live, we'll be okay. What about $10,000 a month? I mean, with 10 grand a month, we're talking about covering the bills and maybe buying an even schnazzier car, like a 911 GT3 Touring. Here's one I built in this obscenely beautiful dark blue color. Couple of light options here and there. We've got the blacked out headlights, the overall kind of black trim package, so it's mostly all dark blue or black, or the wheels really pop because we got the silver wheels with the Porsche ceramic brakes with the yellow calipers. Looks so good from behind, a little understated. And then of course inside we kept things simple, got the adjustable seats, manual transmission, no other options. This car is right at $200,000, which by Porsche's math is just about $3,000 per month. So if we're earning 10 grand a month from the dividend portfolio, 3 grand of it goes to the car. Okay, maybe 4 grand of it goes to the car for maintenance and insurance and gas and everything else. And we're still left with $6,000 a month to live on. So how much longer do we have to wait for that to become a reality? When we waited 23 years to get to 5 grand a month, we've only got to wait 4 more years to get to 10 grand a month, to double the money again. So after 27 years without additionally contributing any money whatsoever, we've just left it alone and let it do its thing. We're making 10 grand a month, $120,000 a year. And as long as the dividends are set up correctly and we're not getting taxed at an ordinary income rate, our income rate here could be the long-term capital gains tax rate, which means we're basically paying $0 in taxes on all that. Not exactly, but pretty close to zero. That's of course in theory. I'm not a tax lawyer, financial planner, but based on my back of the napkin math, it's looking pretty optimistic. Just a long time to wait. 27 years is a long time. But if we want to reel that in and make that a reality sooner, all we have to do is invest more money sooner on, let that grow, let it compound, be patient, and then collect whatever beautiful blue Porsche we decide to take at that time. So you thought this was a dividend investing video? It's really a commercial for Porsche. Thank you to my sponsor, Porsche USA. Just kidding, but Porsche USA, if you do want to sponsor a video, please reach out. Let's talk. Something else that can help us to grow our portfolio over time is to get an immediate match on our money whenever we contribute to it. So if you want to see how that works with a 401k, you can click here and learn about the 5 mistakes that we make whenever we're using a 401k. Otherwise, you can learn about the 1% match that Robinhood just came out with like yesterday. Immediate 1% on your money as long as you meet the terms and conditions. You don't break their rules, you get to keep the money. That's right here. And also, my investing class has an average rating of 4.7 out of 5 stars. So if you want to find out why people like it so much, find the link in the description and check it out. And I'll see you guys tomorrow. Bye.